Hi. So we are back. Welcome. And now we're going to make this emergency update because something is going on here. We have to make it happen fast. And first, we are going to talk about this crazy market because first, a deja vu. Barclays suspend all its commodity funds. It means that this happened in 2009 with Deutsche Bank. They closed all the oil ETFs in 2009. This happened, and now it's happening again. Well, we will make a quick update. If you check, more countries adopting Bitcoin like Africa, but at the same time they're going down. It means that all the theory about the flying pigs 360 Michael Berry won in the past, all is happening. So we are going to keep showing you tweets. Argentina heading for 70% inflation. We have a collapse in the yen. We have the euro is being destroyed right now. There is collapse in the euro. If you check the chart, the euro is being destroyed, and I will show you why will be continue to get destroyed. If you check the chart here, the euro US dollar, you will see that there is no chance for the euro here because this collapse is being pushed by crazy policies, energy policies. They are fighting with Russia, who are the main providers, and it means that the euro is reaching a total collapse to parity now. There is no chance for the euro. Euro is canceling themselves, and it will continue going. Now, at the same time, Russia was ready for this moment, and they wait for a gold-backed ruble for 5,000 rubles to 1 gram of gold. It means that they are pseudo backing the Russian ruble, but still they are not there. There is some fight, but they are ready to fight. Why is happening all this action? The Federal Reserve is taking down the market. This is the forward curves and the software charts, and you see the markets expecting the risk shields in the US dollar going at the end of the year around 3% and stuck there. So inflation is running in much higher now, much higher. This is why we are risking a complete clash of the emerging markets from now, and it's happening. But let me show you the European market forward curves. They are close to a 5, 6 or 7% inflation rate, but the max pay in this curve is much higher. It means that they will not be able to fight inflation. That's why a carry trade is occurring. The yen is collapsing, and the only currency is the US dollar. And I love this chart, and I go back to the euro US market data, and you will see that the forward curves is happening everything again so bad. You see the max pain is around 3%, and this could keep going up. So the market believes that the Fed will stop the increase the market is demanding. They will start to bleed, and they will stop around here. I warned in the past, 25 April, if you want to know who was bearish for gold and silver, Michael Berry. With his flying pig 360, we've been warning since the last year. That's why we were not as bearish. We were not as bullish as the rest of the perma bulls silver gurus out there. So this happened. The Barclays running away from the commodity funds, just like the LMA was running away from the gold market and closing the gold market, it means it's a signal that we will see some risk ahead, an upside risk ahead. But from now, gold and silver are risky more to the downside. The risk is on the downside. If you check now here, check around here, look at this weekly chart and tell me what you see. I see that the risk is in gold is around 1830 is the number, and if you check silver, you will see quickly that the number is 21. The number is 21 for silver. And the returns this year, the risk is to the downside for the precious metals. And if you check here the oil price action, where was the real hedge against inflation this year? Food prices. We've been warning about food prices since November of last year as the real hedge against inflation, and real estate. This was the true real hedges against inflation. So what happened to DXO? This was a oil double long ETM launched by Deutsche Bank. And you check the moment they closed the fund, that was a long time ago, and now it's happening again with the Barclays. And here that was we were trading this contract, and that was on September 9. On September 9, Deutsche Bank was closing the double long ETN crude oil fund, and now we have Barclays closing the funds. We have also LME London Market Exchange closing their action in the gold market, and the price of crude oil went much higher. So even though we are seeing the price of all the prices going down, it means that the gold and silver will continue to go down in the next month. In May, it should stabilize between 21. But let's see what happens later. That's the next test they have. The most important thing now is that the European market data is showing that all the retirees, all of them are going to lose their retirement funds thanks to inflation, and since the market is not pricing that the European Central Bank will defend the European retirement funds against inflation. So there is no chance that they will get protected, and this is very scary because it means that the risk of a complete collapse of the European retirement funds are in this chart. So the Federal Reserve now is the central bank of the world, and they are pricing that they will not chase real rates soon, so they will go slow. The market's pricing that. But since we don't know the amount of leverage in the system, it means that so far now we should continue to see the dollar getting stronger against precious metals, against cryptocurrencies, where there are no rules to the short selling there. So the fear will continue to go, as we have been warning about the Flying Pigs 360 theory. And that's going on here. The Japanese yen had a total collapse. So there is still liquidity in the system thanks to the Central Bank of Japan, and thanks to the Bank of Japan, and thanks to the European Central Bank. Who are the big losers this year? European retirees. European retirees will be the greatest losers because they are not even close to the Federal Reserve, so they will lose money. And they are also fighting right there. They're fighting with Poland sending troops, with Biden sending money to fight with $33 billion US, and the geopolitical risks plus the European Central Bank not pricing a real fight against inflation, like staying in the middle and way below the Federal Reserve levels. It means that the dollar will get stronger and gold will get pushed back down. Gold will be pushed back to the 1800s most likely next month. So the pain in the precious metal is not over, on my view, according to what I'm showing you now. The fact that some banks and the London Market Exchange are running away from the gold market, it could be explain more about what will happen later after this correction. So the chart is very clear, and we have all the pressures against gold, against the euro, and Argentina inflation expecting around now is 60%. Unions are demanding between 50 and 60%, and the risk is that we have 3 digits against, just like the times of hyperinflation in Argentina in 1989. So we are going back to those extreme high levels at the beginning of the 90s. At the beginning of the 90s, we are going to have the level of inflation will be close to the levels of the 90s, not the hyperinflation, but the 3 digits most likely at the end of the year. There is a conference now going on in Argentina, and there is a libertarian candidate favorite, but he also is showing flags of the World Economic Forum in his profile, and he could be the next president, fighting the collapse, because the reason why a libertarian candidate is taking place now as a favorite candidate for Argentinian president in the next year is because socialism is crashing everywhere, because too much debt. That's why Europe is fighting so hard to get a war with Russia, and they are risking a war very soon because they are adding more countries like Finland, and they are risking very high chances of more tensions in the geopolitical risk in Europe. So here is the collapse of the yen, which is highly inflationary for Japan, but the crisis will be contained if they keep increasing rates. They will trash everything, and they will take down silver around 21 at least in paper prices. It will go down. So stay calm and look at the strong dollar. Is just a temporary wave, like a tsunami. The dollar will get stronger before it starts to get weaker and weaker. All the action, all what they've been doing with the currency, with the market, with the rates, is extremely bad for the US dollar and the euro in the long term. Argentina tried all these strategies with sterilizing debt to contain inflation, then it exploded in the previous administration, and this is what Biden's doing. And at the same time, they are pushing Europe, Poland into a war with Russia, and creating all the pressure. So if the Russia protects the price of gold, I don't believe they will protect, because the Russian central bank is saying that they will not go for a gold-backed ruble. So if they want to go for a gold-backed ruble, they should take opportunity of the current trend going down in the price of gold, and they should back it even more. They should load up the track with more of the deflationary opportunity that is given in the gold market. It's not the right time to announce that, but they announced that only to create a strong recovery of the ruble from international point of view, but they are getting ready to get a strong ruby because they are under attack and they're developing alternative international SWIFT system. And at the same time, we are heading to CBDC wars, maybe this year or maybe next year. So the scenario is for the most, if they keep pushing Russia game, it will be a collapse of the euro back to parity very soon. And this is most likely that will create pressure and it will keep the prices of gold and silver under control. So this is my update. I'm going to keep warning about this. We've been right with previous warnings in the past, and now we are seeing the main risk is the main losers will be all the old people in Europe will lose their retirements thanks to this crisis. This is the most important risk now, and they're going to lose big time. So I hope you enjoy this update. Thank you very much. We will be in contact soon.